This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices a little bit lower this morning. We did have factory orders coming in on the weak side, so some follow-through weakness over the last couple of weeks. Also, we have the ongoing geopolitical issues as a negative for these markets. Since this bull market started in March of 2009, we have seen a variety of setbacks for actually a variety of reasons. Geopolitical events from time to time have come in to pressure stock indices. However, the declines that we did see have only been temporary, especially with interest rates as low as they are and are likely to stay low for a very long period of time. So once we are seeing some of these geopolitical issues on the back burner, I think the interest rate influence should take over again. I think we can, at least over the near term, ride out what we are seeing as far as the negative consequences of what's happening geopolitically. Over in the currency markets, seeing the euro currency advancing. We did have Mario Draghi, president of the European Central Bank, making some comments that seemed a little bit friendly to the euro currency. Of course, we did have the ECB holding their policy meeting today, and they did leave interest rate policies unchanged. This after cutting rates, in fact, some of the rates to negative levels at the previous policy meeting. So any gains in the euro currency, I think, should be used as a selling opportunity, since we do believe that more stimulus is coming from the European Central Bank that will undermine the euro. In the British pound, we are seeing some pressure there. We did have a Bank of England monetary official indicating that it may be too soon for the central bank to raise interest rates, so that undermining the pound. Also, the yen trading a little bit higher this after a government official apparently attempting to slow the decline of the yen against other currencies. But we do believe ultimately the Bank of Japan will need to add more stimulus to their economy. So any rallies in the yen should be used as selling opportunities. And in the credit markets, after a very sharp advance over the last week or so, with the 30-year bond advancing a full 4.5 points, a little profit taking coming in, although we are bouncing off the lows with the U.S. factory orders report coming in on the weak side. Also, we are seeing prospects of a Fed rate increase at the July 2015 meeting starting to be delayed to some degree. So it looks like a rate increase from the Fed is being pushed out into the future. At least that is what financial futures markets are indicating. So the main trend on the long-term treasury still appears to be higher. I think any gains should be led by the 30-year bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
I know. I've been sure for pretty.